Welcome to Investors Insights. Our topic today is markets aren't foreign to us. The reason we picked that topic is because we've had a lot of questions in regards to international markets. Should I be in international markets, emerging markets, more exposure in my portfolio with the U.S. having shown such strength this year? Bobby, you answered that question extremely well in our meeting. Talk about that a little bit.
Yeah, so why are we overweight U.S.? Client question we get recently a lot. One, best economy, strongest market, no doubt about it. Then also, if you look overseas, let's start with Europe. Europe is a mess with the Brexit unknown. Germany is in a technical recession. They've been hit hard by the auto export slowdown. In fact, the big auto maker in Germany announced 10,000 job layoffs last week, and so they're hurting. Then also, there's emerging market slowdown. We know that China's still feeling the pain from the U.S. trade war. And then India. 3 years ago, India had a growth rate of 9%. And then 3 years ago, that's a big number. That's a big growth rate. And then now, today, that's been cut in half. And so they've been hit by the auto exports. They've had 6 consecutive quarters of slowdown. That's going in the wrong direction.
I mean, all you have to do really is look at the last weekend we had in the U.S. I mean, like you said, Germany's in near recession, Japan's in near recession, Europe's in near complete collapse. And we had one of the strongest shopping seasons, kickoffs that we've had in years.
Right.
And that's driven by the strong dollar. So our interest rates, we feel like they're low, but they're high compared to international rates where there's negative rates. So money is flooding into the U.S., keeping our dollar strong, which helps the U.S. consumer. We saw a 19.6% increase in Black Friday online sales. We saw a 14.5% increase in Small Business Saturday and Super Sunday sales, and we're expecting a 19% increase in Cyber Monday sales.
Yeah.
Across the board, major double-digit growth in U.S. consumer. That strength is caused by the strong dollar where we can buy more, and we see that in the U.S. with our interest rates being very attractive, our market being very attractive. If you're investing for future potential increase in inflation in the U.S., this is the only real place to invest and protect yourself against that. So we feel that if you're going to get exposure, get it here where we see strength, consistent strength, and consistent demand we see international money coming to us, not U.S. money going to international.
Right, and that's been a theme for this year. That's
right.
one reason we've stayed so heavily concentrated in the U.S. markets for that very reason, and it continues to live up to that. And Adam, you added some additional economic data in terms of the consumer and small business. Talk about that.
Yeah, there's no lie there's anxiety in the markets last December. We saw that, tenfold. The one thing that's really driven us, to your point, Trey, is the consumer. I mean, that's given us a lot of optimism going into December, going into next year. So consumer sentiment was up over 95. So it's up over 95 the last 30 out of 35 months.
That's great.
That's the longest level of optimism since 1998 to 2000. So that's 2 decades.
Yeah.
So we're seeing a consumer really drive this market. Small business optimism, is coming back around. We're getting a lot of good indications with that, with the U.S.-China trade deal going into December. So all these economic indicators are kind of relieving that anxiety that we had last December.
Yeah.
So hopefully that will continue.
Yeah. We hope to continue seeing that. The data shows that.
Exactly.
Ashley, you talked about November.
Yes.
And as we have momentum going into December, just elaborate some more on that.
Absolutely. Well, speaking of data, Federal Reserve Chairman Jerome Powell last Monday really summarized it, we think, really well. He said the U.S. economy is a glass that is well more than half full, as opposed to the international, which is very empty right now, going back on that. And also, as Greg was mentioning, we have to revise our GDP a little bit in the rearview mirror.
Correct.
Once all the math comes in. We ended up doing better in the third quarter than was thought. And one other thing to remind you from last year is, we had a little bit of government shutdown there for 2 or 3 weeks.
We did.
That did not help. The government's back in their spending this time, so we've got some wind in the sails here going into the end of the year just on that.
Yeah, well, and this time last year, we had a lot of volatility, a lot of news headlines, and the government shutdown.
Yes.
This time, we feel like December is looking very strong with the consumer and what's going on in the economy in terms of the United States. Just a lot of positive things going on in relation to the rest of the world. So on that note, we're going to keep you updated. We appreciate all of you following us on social media, and also those of you that have been forwarding that to friends and family, opening up doors for us as well. And then also, this question today about international came from one of our clients. Send that information, those questions to us. We're more than happy to discuss it on our vlogs. We hope you have a great week. coming out of Thanksgiving as we head towards year end, and we're going to keep you updated through it all. Talk to you soon.